On today's episode, Michael Gross said Bitcoin massive rally is real. Meaningful and massive. Predict price to 300,000 in 18 months.
And so I thought, well, the only people who are going to win in this game are asset gatherers. You won't get rich out of performance. So I decided to leave. And that was the right call. I mean, that was the rise of the massive hedge fund platforms. So the people who got rich were the people who had the platforms. It never came to the people who were the old school Stan Druckenmiller.
On top 5, we drop a new video every single day, so be sure to smash the subscribe button. If you'd like to diversify your income, the link will be in the description below.
And that did not sit well to me. Why was there a difference in the value of information or the quality of information that ordinary people got? I thought I had a moral duty to change that. The advent of video gave us that opportunity. So we started Real Vision in 2014 with the passion and mission to democratize the very best financial information. And what we did was we reached out to the people who were impossible for anybody to have a call with, let alone speak to. The world's most powerful and famous hedge fund managers, people in my Rolodex, and said, listen, will you come on and speak for an hour and a half and tell us how you do things, what you do, the lessons you've learned, and what your thinking is going on right now? What are the opportunities? What are the risks? And they said, yeah. And that was amazing. So they came on, and that was the start of Real Vision. We kind of changed everything about how financial media engage. We do analysis, not news. So we launched Real Vision Crypto because it's going to be the big part of the financial markets, the new financial markets that everybody needs to understand. This is not only the biggest investment opportunity I've ever seen, but also is going to change everybody's lives. When something like Bitcoin comes, it offers a different solution that complements gold, doesn't take it away. They don't have to be one or the other. They just both work for different people in different times. And blockchain technology, well, forget all of the, should it be Bitcoin? Blockchain itself is an amazing technology to verify trust. If you think of the financial markets, when a company like Lehman Brothers goes bust, nobody knows who owns what. There's not enough trust in financial markets. Blockchain solves all of this. It also solves everything from custody to payments layers to settlement, and you can build these amazing applications like decentralized finance on top. So there's two revolutions going on. One is the revolution of money, which is Bitcoin, and one is the revolution of the entire internet of value, which is all of these blockchains from Ethereum to whatever you choose, whichever blockchain you're looking at. Wildly different. I have never seen anything like what is going on right now. You have a limited supply asset that now is a globally recognized brand that everybody knows, not everybody understands. But what's happening now is institutions are coming into the space. So first it was the hedge funds, the family offices. Soon are the pension funds and the investment advisors. And they're all coming in, and the more the market cap of Bitcoin comes up, it's about 350 billion right now, the more that they're forced to go in because it's such a ridiculously well-performing asset and they're so uncorrelated it is. So we've got a massive wall of money that's coming into this space. And for the first time in our lifetimes, we as ordinary people get to front run the institutions as opposed to them front run us. And so, my conversations of this is, this is real and meaningful and massive. Yesterday alone, I was speaking to the founder of one of the largest investment advisor firms in America. Investment advisors alone have 5 trillion in assets. And he's trying to get all of his advisors and advise all the others as soon as the ETF is launched to get up to 1% of assets. That's 500 billion from the investment advisors alone. It's incredible.
Do you think this institutional money has anything to do with a shift in attitude towards blockchain technology? Let's say blockchain existed back in late 1990, the 90s, early 2000s when you were still at Goldman. Do you think the banks would have adopted blockchain then?
Yes, they adopted the internet then. We've all seen these phases. These things where we're not going to use this is rubbish, why do we need this? I've got a fax machine, why do I need email? Suddenly, what's a fax machine? Look at all these .coms, aren't they a mania? Next minute, it's normal, it's part of life, and Amazon's a $1 trillion company. The world goes through these phases, and the more conservative people, the less risk takers, tend to be later to the party. So I think the banks are late here because they're going to get disrupted somewhat.
I've heard a lot of different forecasts on our show for Bitcoin: 20,000, 30,000 by next year, 100,000 by next year, a million in a couple years. Can you help us reconcile this?
Measures. I use technical analysis, logarithmic charts. I use the stock to flow ratio from a guy called Plan B. People can find him on Twitter. That's very well constructed. I use a whole number of different yardsticks. Somebody sent me a report today that had been written about Metcalfe's law and applying that, the adoption of Bitcoin and putting it in price. They all basically come to the same thing. They basically come to, we're going to be somewhere between $500 and $1 million within 5 years. And we should be somewhere between 100 and 300 in the next 12 to 18 months.